This Equipment World video is brought to you by Chevron Delo 600 ADF Ultra Low Ash Diesel Engine Oil. It's time to kick some ash. Hi everyone, welcome back to Equipment World. You're watching The Dirt. I'm your host Brian, and today I want to revisit a topic that we covered a few months ago. You may recall we had the economic outlook for 2022 with Ken Simonson. Well, things have changed a little bit since then. Russia decided to go to war with Ukraine. The feds are talking about raising rates. There's a lot of stuff going on. And I don't know about you guys, but we've already seen some jobs pull back and say, hey, we're going to hold on. We're just going to see what happens before we proceed with our project. So instead of me sitting around speculating and trying to give you the direction the wind's blowing, I'm reaching out to Ken again. And we're going to talk to him about what we can expect now, updated in 2022. But before we get into that, I want to take a second to tell you about the sponsor of this video, Chevron Lubricants. Protecting your diesel engine and its exhaust aftertreatment system has traditionally been seen as an either-or proposition when it comes to choosing the engine oil that's going to protect your system. And that's exactly why Chevron spent more than a decade of R&D work developing a no-compromise formulation. Now, I don't have to tell you why a clogged DPF is bad news, but here's the real kick in the pants. 90% of that ash clogging up your DPF and then upping your fuel and maintenance costs, it comes from your engine oil. You might be thinking, why don't they make an engine oil with less ash in it then? You'll be happy to learn that Chevron agrees with you. They've developed a new ultra-low ash diesel engine oil that is specifically designed to combat DPF ash clogging. Delo 600 ADF with OmniMax technology cuts sulfate ash by 60%, radically reducing the rate of DPF clogging and extending the DPF service life by 2.5 times. Before you had to choose between protecting your engine or your aftertreatment system. Now you don't. Delo 600 ADF with OmniMax technology. It's time to kick some ash. Well, Ken, thank you for coming back on the show today and talking to me more about the economy.
Sure, things have gotten a lot more volatile than we talked just a few weeks ago.
Yes, I would use the term spicy. It's been interesting. So my main question, and probably the biggest one for everyone, is in the short term, in the next couple of months, what can we expect to see from an impact from the Russia-Ukraine conflict on the economy?
Well, we're already seeing a huge impact on petroleum prices. Diesel fuel went up 75 cents a gallon in just 1 week from the end of February to March 7th. And with the president saying we're cutting off the purchases of oil products from Russia, I think we'll expect even higher oil prices. At some point, economists like to say the cure for high prices is high prices, and that means people will start reducing their driving or their purchases of oil for other reasons, and prices will come down. Also, unfortunately, the war means that we're likely to see a reduction in economic activity in some other parts of the world. I don't think the U.S. will catch the flu from that cold that's chilling other places, but we are likely to find that some prices are dropping for materials that are no longer in such strong demand. But for the moment, lots of things are going up. Nickel prices just went totally out of sight, and that means difficulty getting supplies to make stainless steel as well as for lithium batteries. So a lot of knock-on effects from this war.
So thinking longer term, because I know some people are kind of under the impression that the Ukraine conflict will probably wind down in 6 months. Some people are thinking more longer term. If it ends up being a longer term, 8, 12 months, 16 months, what kind of impacts will we continue to see? Will the U.S. kind of get back on track from the petroleum standpoint, or is that something that's going to continue to plague us through this entire conflict?
I think we're going to see a lot of dynamics change around the world. Already there's been talk of the U.S. easing up on its embargo on Iran and on Venezuela, trying to persuade Saudi Arabia to produce more oil. I don't know where any of that will wind up, but I think there will also be incentive for U.S. drillers to pick up their activity. You know, they really put those drills into storage a couple of years ago, and they said, we're going to be much more disciplined. Well, with crude oil trading well over $100 a barrel, that's a pretty strong incentive. The The last time oil was that high, it really brought out huge numbers of drillers. So I think this is one thing that will shift, but also it clearly gives an incentive to looking for alternative energy sources outside of petroleum. There was already a big push by the Biden administration and many state governments to get more alternative energy produced, and so we'll see even more in that direction.
So this is where my true ignorance comes in as to what's really being impacted by the crisis going on. When it comes to lumber and building materials sort of goods, how are those prices going to kind of change over this next 6 to 12 month period with everything going on?
At the very early stages of production, there may not be that big an impact, although many things that go into construction require huge amounts of energy, and specifically petroleum products right from the get-go. So to dig up the ore or the rock that you crush and turn into metals or into cement and aggregate, that takes a lot of oil. And then to carry those heavy, dense materials to the point of distribution or to the construction site, you're talking a lot of diesel fuel there. And so I really think fuel surcharges are going to be very prominent in anything that contractors buy. And that's going to be a fact of life for quite a while.
So what is interesting, you kind of mentioned that some of the world's going to see a pretty good economic slowdown, but you didn't think that the American market would necessarily see that big of a slowdown. Just out of curiosity, what makes you say that? And when do you think we'll see kind of a taper down of all of we've got a lot of inflation plus everything from the crisis. When will we kind of see that start to taper down a bit?
Well, we're fortunate in that we're more insulated from the effects of trade on our economy than many others. And in particular, we're better insulated from petroleum price swings, even though we're certainly feeling it at the gas pump. Remember, the U.S. for the last few years has been a net petroleum exporter. And so when these prices rise, that means the value of the oil and the natural gas that we're sending to Europe and other places, that goes up, and that lines the pockets of a lot of American companies. And so there will be mixed effects by region and by segment of the economy. But I think overall, it will be a minor negative on economic growth. I think we're certainly going to see the impact at the consumer level in terms of prices, and at the producer level, depending what kinds of products you're buying, how dependent you are on transportation and on fuel. So contractors, they're probably more exposed to the run-up in costs than many other businesses. Sitting in my own office, I don't use a lot of petroleum directly, particularly on the days I'm able to bike to work.
So my next question is, on top of everything else that's happening, the Fed has talked about raising rates, and I believe that would be towards the end of March, if I recall right. And then is there another possible rate hike later in the year that they're discussing?
Yeah, I'd say the war has affected the timing and the speed of those changes also. So the Fed will be meeting in mid-March, and they're expected now to raise that short-term interest rate target by just a quarter of a point. A few weeks ago, many economists were expecting a half-point increase, and they still expect more increases as the year goes on. But I think the Fed is getting less sure, or the members of the Federal Open Market Committee less sure about how many times and how soon to do other increases. It's really going to depend on how that war evolves and affects the global economy. But I think in any case that, again, construction is relatively insulated from those effects, that there's still going to be demand for housing and for construction projects, and contractors themselves aren't going to be experiencing a big run-up in interest costs. Out
of all of the sectors in construction, it seems to me with the the passage of the infrastructure bill and everything, that kind of the heavy civil side especially is going to be pretty well insulated from a lot of this, just because this is money that's already in the pipeline. What other sectors are really going to be the ones that kind of take a hammering off of the Fed rate, or the rate hikes in the stuff going on in Russia?
Well, you're partly right about the IIJA providing enough money that will see growth in construction. But to the extent that contractors and highway contractors, I think, are extremely exposed to these fuel cost increases, and most likely asphalt costs, concrete costs also, because that's a very energy-intensive business. So to the extent that they start putting higher prices into their bids, that leaves fewer projects out there to bid on, or states deciding to defer putting some things out to bid. So that is a bit of concern. And the building construction side, a little less exposure to petroleum costs, but steel may well be affected by this war. Russia and Ukraine are a source of steel and also of specialty metals for making things like stainless steel, galvanized steel. So, there may be some impact there too, but I don't think it'll be a severe one on price. Supply chain is certainly a question mark with all the ships that have now been tied up or diverted by this war.
Overall, it sounds like things will slow down a bit, but we're not going to come to a screeching halt. We're not going to enter into some dramatic recession at the moment. It sounds like things are just going to slow up a hair as we have Ukraine and Russia, and then as the Feds march up the rates. Is that kind of an accurate assumption?
Yeah, I think that's a good way to put it. I think the biggest impact is going to be on costs, both for contractors and for consumers, but it won't stop them or their customers, in the case of contractors, from going ahead with projects or spending money.
Perfect. Well, Ken, thank you. This is valuable knowledge, especially whenever there's uncertainty. Everybody on the contractor side especially, we start to pucker up real quick. So I do appreciate your expertise on this.
Okay. Have a great day, Brian.
Well, thank you again for watching. I hope this has been helpful. I know it's not the greatest news in the world because things will slow down a bit, but at the same time, hopefully this takes a little bit of fear out of the situation, knowing that we're not headed towards a recession. We're not heading towards ultimate demise. It's going to be all right, everyone. It's going to be all right. So as always, I hope this has been helpful. We'll catch you guys on the next episode of The Dirt.